Hi folks, Scott here, and this is the wrap for Thursday, September 26th. Let's take a quick look at the daily chart. S&P 500 cash index here, and you can see we actually finally put in a higher close, breaking a string of 5 consecutive down days. But what's interesting is that yesterday was a 5-day low close, but not a 10-day low close. 10-day low close was actually over here. So what I thought would be interesting to test and show you the results for is the following: fading gaps after a higher close that was preceded by a 5-day low close that was not a 10-day low close. So essentially, you've had some weakness short term, but not as bad as it's been. And now you've paused and bounced higher. What's likely to happen the following day? That's what we're trying to get at with this test. And there you go. Slight bias for gapping down after this pause, right? Because the downtrend is still in effect. This is using an end of the day stop, by the way, which shows above average odds for gap fill and profitability. So might be a slight edge for the long side there. I won't know for sure until I rerun those numbers in the morning for our members using our MTG stop parameters. A gap up, however, shows above average risk for I think the third or fourth day in a row. Looking at it a slightly different way, up gap only 62% historical winner, has been a big money loser using an end of the day stop. Even with our MTG stop parameters, we know that win rate is going to be weak because it's going to be that number or more than likely less, right, once you include an intraday stop. So again, it looks like there's a clear long bias going into tomorrow. Now I will warn you, Fridays tend to be good days for shorting up gaps. So that doesn't mean that I will short one and overlook this information, but I may still do it if our gap guides and our worksheet are still attractive. I'll just reduce my position size, frankly, to account for a pretty clear risk factor here. All right, going into today, as I just mentioned, the markets are poised to bounce. Let me show you the price action. And there was a pretty inviting gap here. You had the YM open clearly well down the DOC zone, then rallied hard. You had the ES open well down the DOC zone. This is basically in the body of the red candlestick, but below the prior open, above the prior close. Rallied hard. Russell, also the DOC zone, and then the NASDAQ even sold off. It wasn't around that DH zone for a while, open in the DOC zone. DOC zone is one of the better zones for trading in general. But let me show you what the data showed today from my database. So first thing I always do is I look at the worksheet, which summarizes the 8 individual indices gap guides. And I'll look for the opening area that was in play. This morning we were opening between yesterday's highs and yesterday's close. And these opening areas are a little bit different, right, than the gap zone map. They simply take the 10 different potential opening zones and organize them into one of 4 potential opening areas as my starting point. So this is sort of bigger macro picture data, and always focus right smack dab here in the middle. Gap fill odds were just about dead neutral today. Now there's another zone, that DHO zone tends to be more problematic, so that's considered in these numbers. So I still was open-minded and felt like it was worth looking at the gap guides to see how they played out. And I'll show you those in a moment, or how they set up for today. No unique day factors, neither good nor bad, nor unique patterns in play for today. So let me show you the gap guides, which is what I had to do to confirm my interest in the trade. And the DOC zone between 1692 and a quarter and 1686 and a quarter, if the price was trading there at 9:30 a.m. Eastern time, that would be a DOC zone gap. For the ES, dead neutral. I'm looking for 60% win rate minimum, check, but profit factor PF only less than 1. So it's been a slight money loser, not a money maker. So that was concerning. So that was, I'll call that neutral. I'll call YM a check. I'm looking for 61.3 for all intents and purposes, right there. Check. Slightly attractive with the NASDAQ, but not quite, maybe a half a check mark. And then Russell, no check. So 1.5 points out of possible 4 total. That's how I organize it in my head. Spider, definitely a check for the DOC zone today. So that was 2.5 points. Diamonds right at it. We'll give that 3.5 points. And then Q's, That's a tough call. Some people call that neutral, slightly attractive. I call that basically neutral. If this number was 70%, I'd call it slightly attractive, but a little bit of gray area here for sure. And then check on the Russell for 4.5 points. But none of them, in fact, if you look technically, 1.3 is my criteria. This did not meet. That did not meet. That did not meet. It's missing by about 1/100th, but it's consistently either barely making it or narrowly missing. Definitely no. Did not make it. Did not make it. Didn't make it. So what? 1 of the 8 technically met my criteria. So a little bit neutral for me. No unique patterns from the worksheet. So was left to my own devices, and a couple risk factors that we've been showing this week as well. Per last night's wrap, fading up gaps after 4 consecutive lower daily highs. That's a dog. 50-50 on a decent sample size. Non-cowboy DOC zone gaps. Another dog. They're just problematic. These were 50-50, so these were weak scenarios. That's essentially what I said here. Unique data was weak for today, neutral for the DOC zone. So market still looks ready for potential bounce. Data's a little weaker than even yesterday, and said I will not fade a gap up. It just wasn't compelling. Now, here's the deal. If you had a filter, an indicator, a favorite technique for entering a gap trade, by all means, when you see me on the fence, trade the gap when it triggers. I wasn't clearly staying away from this. This wasn't clearly a bad trade. It just wasn't a clearly compelling trade for trading with historical data alone. So that's my point. So I passed at the open. In fact, often these scenarios will rally up and then fall apart a little bit. Some of my testing showed that 2 o'clock was often the time they'd fall apart. So I actually went long shortly after the open, pure discretionary trade, and got +3 on the first half. Rode the second half, was targeting +10, and it went up like +8.5 points or 8 points, then rolled over and stopped me out of my entry point. I wasn't sitting here babysitting it, so just made an average of 1.5 points. That was pretty frustrating because you can see the action here. Ran up. How much did it run? 89. I was up. Yeah, I got in right after the open. Right after the open, actually. For all intents and purposes, it was a follow the gap scenario. Had some testing that looked good for that. That I ran right after I posted my numbers at 9:20, and only made a tiny win because it rolled over and stopped me. That was disappointing. But and I did an end of day gotcha trade because the gap in the Nasdaq had not filled, and pressures had been to the short side. So I thought there'd be more likely to have a short covering bias into the close. And I didn't make a whole lot here. I captured 4 points, or about $80 per contract here at the end of the day. So nice little move there, and that was my day. Oh, and I did the overnight trade too because the data was good. Sorry, these are just little discretionary trades. I'm not going to trade big size or significant size unless I've got historical data on my side. And last night we had another 60% chance of gapping up, and I went long. If you let me show you the futures. It's getting a little bit long-winded here. Don't worry about the colors. But I went long last night around 10 o'clock, 10 or 11. I think it was right around here, 10 or 11 o'clock, just above the 4 p.m. close. Anticipating, frankly, that it would break this trend line. If it did, it would continue higher. I had my stop just, let's see, I used a 4-point stop, 88. I was somewhere right around here, around the prior lows. And scaled out +3. And actually, that was here. And then I got to tighten my stop to around the entry area and got tagged here right before the open. I think it was right before the open, before it took off, of course. But still, consumption in the right direction, not risking much, and decent little trade. Anyhow, just sharing that. Was all based upon the strong data again for gapping up today, and paid off for me. So that's the wrap, and we'll see you tomorrow. Have a good one.